Good morning, everyone, and very much welcome to another Flash Friday. My name is Don Ginsel, and I will be your host for today and taking you through the developments in fintech. And especially today, we have a strong focus on blockchain and crypto development because we have a very special guest, namely Red Oudkerk-Poel, the CEO of EuropeChain. Red, good morning.
Good morning. Thank you for having me.
Yeah, very much welcome on the show. We're looking forward to chat with you about all the developments in the blockchain world. Just for the people that are new to the show, please type any questions that you have in the comments or in the chat. We're happy to see if we can weave them into the story. And what we'll do today is we'll just have a conversation with Red about developments at EuropeChain and his view on the blockchain market, as well as look at some of the other items that were in the news this week. I'm looking forward to have this chat with you for about half an hour, and just let us know any feedback or questions that you have directly. So Red, maybe to get started with you. What are you up to these days? What's going on with EuropeChain?
Yeah, there's a lot of things going on right now. I'm the CEO of a company called EOS Amsterdam, which is a block producer for the EOS protocol. We produce for about 9 blockchains. And one of those blockchains is our own blockchain, which is the EuropeChain, which was launched in a consortium with 5 other European block producers. And it's providing blockchain capacity to European enterprises. If you like the EOS or EOS.io protocol and you're building on top of that and you want to service European customers, then of course you have to think about the privacy regulations, the GDPR regulations we have in Europe. And what we've done is we have spin up a dedicated public chain for enterprises that need public capacity, but need it to be GDPR supporting, so that at the end their application can be GDPR compliant. We help them with that. We have legal tech, business development, even social media in our backpack of services, I would say. So we have customers in the NFT space, we have customers in DeFi, we have customers in trade finance, medtech, all kinds of industries where we have customers. Don't forget CatChain, a very interesting concept to bring cryptography to the cat industry, the engineering industry. So very interesting customers.
Yeah, because indeed you mean, let's say the automated drawing perspective, right? So digital drawings of technical appliances. Okay, no, that's really what's really going on there. So because I think you mentioned a couple of things, I think that we should explain a bit throughout the talk. That might be not so familiar for everyone, but so maybe to start with this one, how's your application being used? So what requires cat drawings to, for example, be listed on the blockchain?
Yeah, one of the popular and very simple use case is doing proof of ownership of a drawing. Maybe you've heard of WordProof. WordProof is basically doing the same, but then for web pages. That was originally an idea that I had. How can somebody that is using, for example, WordPress, use blockchain to prove that this web page was mine, is made by me, a blog story, for example, some news posting. So as soon as you post it on a website, post it on your WordPress website, in parallel, you timestamp that on a blockchain, proving ownership and proving that you were the first with that information. Search engines like that. Similar story with CatChain. How do you prove that this AutoCAD drawing, this piece of engineering work is yours? Timestamp it on the blockchain so that you can always reference that you were the first, that this drawing was yours. But you can take it, of course, a step further where you have all kinds of modules in the architecture of that CAD software where you can encrypt modules, encrypt parts. And if you take the step to 3D printing, there's all kinds of protocols available, and you can basically build something that you could call digital rights management on the blockchain, where you can prove ownership and you can limit the things that other engineers that need your drawings can see. And so you can basically make money from your IP or your drawings, which is very difficult at the moment because very quickly in that industry, you need to share data. And as soon as you share data, as soon as you share the drawings, as soon as you share the files that direct a 3D printer, these files are unencrypted. So you basically the technology can be stolen, and can be reverse engineered, etc., etc., etc. So
that would be an interesting one for that part of the industry if they would actually think about end-to-end encryption to the printer, right? So that could be interesting. That only the printer could actually read it rather than other people. But I think this is an interesting case because, but it basically indeed is in the space of, let's say, like patenting or what you would normally do at the notary with some kind of document validation or ownership validation, which I think is these cases. I think you see a lot if you look at blockchain appliances. I would say, but it's really, really interesting that they're doing that. And also, if we draw that line to the NFTs, for example, that you mentioned, right? So the non-fungible tokens. We've seen some crazy news over the past months with some digital pieces of art that were actually auctioned for very high amounts. Well, of course, you could always argue, indeed, is this really made by them, and how much value is this actually? Because it seems like it's all indeed something that anyone can create very relatively easily. Sometimes it's not, right? But actually giving it a certain ownership stamp really does something with the value as well. How do you see that evolving, Red?
Yeah, it's one of our key practices that we support customers with. So we have one of our clients is a company called R2. It's a small company of two people that are from the collections. I wouldn't say even space. They are from the collections space. They love to collect the GPK cards. Maybe some of you guys remember that they were attached to chewing gum. I think if you're between 30 and 45, you might are in the right age group where when you were young, these cards were supplied with chewing gum, and some of these people still collect these physical cards. It's a parody card, and two of the collectors basically started a company creating concepts around these parody style cards. So we have they have Monsters of Rap, for example, one of the collections that they brought to market. And because the NFT craze that you were referring to is so big right now, they sell out. The last series that they introduced was sold out in 2 minutes. So there was a $61,000 of NFT cards sold in 2 minutes. And all their series are sold out. What do? We supply them with technical knowledge and legal knowledge on how to launch campaigns like that. And we are in touch with famous people that want to bring collections to market. So you can imagine we're great in the global DJs. We're great in K1 fighters. So we are in touch with some of those people to bring collections of digital art and memorabilia to the blockchain for their fans to purchase. Don Diablo did a piece that was auctioned for, I think, $1.2 or euros. I don't remember. And of course, the 69 million people that you referred to earlier was done by Christie's auctions. And we also developed what we call an auction platform. So companies like Christie's and others could do auctions based on the technology that we use. And we have put a lot of time and energy in an identity platform for DeFi marketplaces, for these style of auction platforms. Companies need to manage their clients or their users. And we have developed an identity system for that. And that really uses the power of blockchain. So
So do you see that that's where, so let's say, because I'm always curious also what sort of the impact could be if this sort of further evolves. And do you think that this is really where a lot of things on the internet we're used to come for free, right? Because everything is copyable and well, it's hard to own anything that's online. Do you believe that's going to change in the long run because of the basically the possibility now to actually be the registered owner and actually be able to, for other people to validate that?
Yeah, I think it's partly in the culture of the crypto industry and the blockchain industry. Is, of course, one of the sayings is "not your keys, not your coins," and so our identity platform is very privacy focused and not your data, not your coins, or how would you say that? At least the whole architecture as we have implemented it is that you own the data. We, as supplier of the technology, we can't see anything. If you lose your keys, then we don't have access to the data. We have some mechanisms to reset it, but that's only if you allow us to share your email address. So it's really in the spirit of how the blockchain and the crypto industry has been evolved. Take back ownership of your data, take back ownership of your money even. And so it's a different mentality. And there's a lot of organizations in Europe that struggle with GDPR. I think the current IT stacks are not very secure to build good financial applications on top of it. Only the banking industry can, with a lot of measurements, make it somewhat secure, but a lot of other companies struggle with. I get a lot of data from my consumers. One of our clients is a mortgage broker. They get salary slips, copies of passports, just to process a mortgage.
This is really interesting because indeed there was also last week a case of it was a real estate builder, actually a contractor, lost a large amount of personal income data because they accidentally emailed it to everyone who was interested in a certain set of houses. So it's a really big mistake.
Yeah.
But my question is always in those cases not how can they better protect this. My question is always, why the hell should I have this information, right? So how did we create a system where actually we're sharing sensitive data with everyone across the planet because we require them by law to share that information, or at least the processes are all designed by that. And I think that's the biggest flaw in GDPR in my regard, is that we actually don't know. We know there are all kinds of rights, but actually the processes are not adapted to that yet, and we don't have a good clue on how we should adapt them to make sure that actually there's a minimum requirement for data, right? So there should be the least amount of data possible to do what you have to do. Yeah.
I mean, with the adoption of GDPR, the new GDPR, like what was it, 3 years ago? If you were now building something that Heijmans is doing with our technology, using the DID and the verified credentials strategy that we have, it's not all there. But to build the Web3, also the W3C, which is the governing body for HTTP and HTML and HTTPS,
not too fast with all the abbreviations, Red.
Yeah. But basically, the industry, the IT industry, the web industry, one of the major players in that has developed something that we call decentralized identity. Mm-hmm. How do we get to a world where the local tennis club or Heijmans or others do not store all those information? They basically only need to verify certain levels of salaries. Like, for example, in the Heijmans case, they don't need to have all that information. They need somehow to be able to confirm that this guy is legit, that he has some sort of capital, that he has a level of salary, and that can be done with a new generation of protocols called DID and verified credentials. So you could have, for example, your birthday implemented in this DID methodology. So the Dutch government, you have your own wallet, you type in your own date of birth, so you'll be able to lie because you have to type it in yourself. And with verified credentials, you could ask somebody else to confirm that what you typed into your wallet is correct. And then exactly. you have that information yourself. And then with zero knowledge proof technologies, you could, as an external party, could ask, is this guy over 18, yes or no? You don't need to know his date of birth. You only need to know if he's 18 plus or not. Yeah. And the same counts for salary.
No, exactly. So, but I think actually the zero knowledge proof is actually more of a process agreement rather than a technology, right? Because it actually just says you just need to know the answer to a certain question, not have all the information, right? So if you, for example, if you want to buy alcohol, you don't need to show everything that's on your driver's license or your passport. You actually just need to prove that you're over 18. And if someone is willing to vouch for that, that might be enough. And that's basically the zero knowledge proof idea. Yeah. And I really believe that that's probably the only way to actually avoid big data leaks is actually avoiding the real data to move around. Like also Targol is mentioning in the comments from Portugal. Good morning to you as well as to Vlad. Yeah. And indeed, it's let's say as long as the information is being shared and it's lying around somewhere, it's at risk basically. And I'm really curious if because I think that currently the fines that are being issued by companies around, by the basically the agencies that are looking after data protection are not threatening enough. But they will become more threatening, I think, at some point, where having data becomes a real risk. So let's move on to something else, right? I think talk a little bit. You mentioned at the beginning that you're working on EOS as well as Europe Chain. Can you explain a little bit how these two come together? What's this? How do they compare, basically?
Yeah, well, EOS is the name of the token, and the other underlying software is called EOS.io, and that's just normal open source software. So what some companies did, and Europe Chain is one of them, we took the software and we spin up a public chain using that software. We kept everything identical. So if you are developing smart contracts or concepts on top of the EOS blockchain or others that use the same software, they're all interchangeable. And currently we, as EOS Amsterdam, we are producing for 9 blockchains. And
so these are 9, and these are all EOS.io based blockchains?
Yes, they are all identical in the fact that they use the same software. So look at WordPress. It's open source software. Multiple websites in the world use the same software. You have service providers that can host you the WordPress software, and that is basically what we do. We took the software, we are hosting it in a decentralized platform way, the way it's supposed to be. So you have 21 producing companies. So decentralized enough to say that it is a blockchain. And depending on your needs, you can go to one of those blockchains to provide you capacity to do your application. We see a lot of applications that only have like 1 or 2 transactions per day. But what we start to see now is applications that need hundreds of transactions per day because they are replacing traditional database architectures. That can be in a private blockchain and can be connected to public blockchains for transparency purposes or for trust purposes. What we are all building is something that we call the Internet of Value. You can imagine that if we go to the next generation of internet, we need millions of transactions per second. Bitcoin currently does 8 transactions per second. So completely unusable for anything except digital gold. Ethereum, 35 transactions per second globally, completely unusable for anything serious. What we need is millions of transactions per second. One EOS IO chain does 10,000 transactions per second. That's not enough to build millions of transactions. So what we need is thousands of blockchains. Let's say we increase the capacity per blockchain to 100,000 blockchains per second, or 100,000 transactions per second. Then we still need thousands of blockchains to power the Internet of Value. So the strategy is, how do we build that? Well, some companies say we build specific industry-specific use case or chains, like a gaming chain or a real estate chain. Our idea is that the world will have geographical chains. So that's why we started the Europe chain. We've been copied in Latin America by a group of friends that started the Latin American chain, the LAC chain, Latin American Caribbean chain. And we are launching ourselves a chain for India, the Satya chain. And we have been in touch with countries like Dubai and Saudi Arabia that say, could you spin up a chain for us in this protocol, so that everybody that wants to use this protocol can do that on a government-approved chain.
Okay. Isn't it going to be tough in India? Because I believe they're quite repressive on crypto and blockchain these days.
Yes. Well, that basically approves also our model that to make something legally compliant, it's easier to take a certain jurisdiction and spin up a chain in that jurisdiction so you can make it compliant to the regulations. For Europe, is GDPR very important. In India, all the crypto regulations are very important. So we're working with system integrators and lawyers there to architect something that works for that region. The main reason why it's not there yet is because the regulations are unclear. So we're also waiting until the regulations are a little bit more clearer. Then we can launch a chain dedicated for that region.
Yep. And so, okay, I think that's pretty cool that you see basically how these sort of geographical areas, how they evolve, and also how they will evolve over time because of different regulations and different cultures perhaps as well around that.
Yeah, and in my opinion, it's simple IT technology. I mean, the whole crypto industry is full of people that want to save world hunger and save the whole financial system. But we think at the end of the day, it's just simple IT tech. So we cater to system integrators and large enterprises because they understand that I need a blockchain as a service provider. Yeah. And we are that blockchain as a service provider for that.
Yeah, exactly. But I think it's interesting because the sentiment of basically the blockchain being a more revolutionary tool rather than an evolutionary tool, I think is being subscribed by a lot of developers and builders in the blockchain world. And of course, it has the potential to do things quite differently. However, it's so different that it also kind of creates quite some friction with the existing legal framework that we have to deal with. And I think that's also one of the bigger challenges we face with implementing blockchain and crypto solutions around that. If you look at that, the application in finance is very often referred to as DeFi, right? Decentralized finance.
Yes.
What do you see? What kind of applications do you believe are going to be? Are we going to see there?
Well, there will be basically a rebuilding of what currently is in the centralized finance world. So borrowing and lending and that sort of thing. And what we see a lot of interest in is factoring of invoices. I have multiple projects in that space. So basically making an NFT of an invoice and then trading that legal obligation to pay, so that you could call that factoring. One of our clients is in the trade finance, and then the difficult trade finance. I didn't know that, but like 15% of the world trade doesn't happen because buyer and seller can't organize the shipment. Can't organize the transport. because they are unable to find the financing for that transport. So if you're shipping bananas from Brazil to Angola, you don't have the whole financial ecosystem that we have here to create that shipment. So Consul Freight is tapping into that market by combining IoT and blockchain. So the containers that they use are supplied with sensors from Telefonica to see whether the container was opened, yes or no. The temperature in the container was within the range that everybody agreed upon. So you can basically combine IoT, blockchain, smart contracts, and you end up with an insurance product. So you don't have any disputes whether the shipment was within the temperature range, because the devices tell you that. So it makes it a lot easier for insurance claims. And you can connect it to GPS devices. So, for example,
you can track it real time, basically.
Real time tracking, and you can pay 50% as soon as it ports the harbor, and that can be fully automatic because the device tells you it arrived in the harbor.
So I really believe as well, indeed, that we will see finance being much more connected there to the actual supply chain itself, right? So I think it's really more like a feature on top of the data flow that's already there, because you want to track where goods are and what state they are and what value is attached to that. So I think indeed DeFi could play an interesting role there. Vlad is asking a question that's related to that, is how to actually deal with AML issues around decentralized finance. I think it's one of the challenges we see with some crypto and blockchain solutions, that basically complying with the know your client and potential anti-money laundering measures is quite a challenge.
Yeah, absolutely. One of the interesting concepts of DeFi is that instead of getting one supplier supplying you 100,000 euros to do the trade finance you want to do, try to find 100,000 people that want to do €1 to supply the trade finance you want to do. But how to automate the KYC and all the requirements of this 100,000 users is completely different than KYCing a one user.
It's going to cost you more than €1 per piece. So the return is not so high. Yeah.
Yeah. So what we are into is, with our identity system, tailored to the need of the DeFi space.
Yeah.
And to be blunt about the whole space right now, the whole crypto world is pretty anarchistic in KYC and AML regulations. They prefer not to have it, and they are trying to fight against it. Now, our approach is really to make it compliant, and basically are building the base layer, the railroad tracks that you need to do that. So KYC and AML are things that we understand. We have people that come from that industry. So we are building tools for enterprises to build on top of our tools and be compliant with those regulations.
Yeah, they're quite good. Yeah, I think you see indeed that there's a lot of developments going on now that actually are making life easier, and therefore making blockchain and crypto much more mainstream as they were before. I think one thing, of course, as we're almost heading already towards the end of our time, Red, it's quite flying. One thing we, of course, need to mention this week, Coinbase got listed. I think a highly anticipated and one of the big signals that crypto is becoming more mainstream. What are you thinking about this development?
Well, it's fantastic that, I mean, I sold my house in Amsterdam December 8th, and the whole crypto industry has gone up since December 11th. So I'm a happy camper, as you say. And Coinbase is just one of those news items that I think will continue to push the crypto space forward. And yeah, so I'm very happy with all the steps that are, and Coinbase is also one of those examples that they were criticized for that really said, no, we want to be one of the first very regulated exchanges. And yeah, I think that is necessary. The way I see the whole crypto and blockchain space is that the European market is completely different than my friends in South America and my friends in China. They are clearly trying to solve different problems, and that is what we are trying to do with the Europe chain as well, solving different problems. And a Coinbase is also tailoring to a part of the exchange market that likes that they are regulated, and that they like that they work with officers to make everything legally compliant. And yes, they have tools to monitor you. They have the AML tools in place, and they even bought an AML company to do that. But in my opinion, that is just connecting this new innovative world to the old world. And in the old world, well, we plain and simply have to play by some rules that we have developed over hundreds of years, how to do business in a correct way with each other. Yeah, so
yeah, we definitely have to. We'll see that these things converge, and hopefully they'll notch up the old world a little bit, make them a bit more tech savvy and smarter than before. But indeed, there's a lot of convergence, of course, going on. I think we already have to wrap it up, Red, because our time is up. So I'd like to thank you very much for sharing your insights with us today and explaining your view on the blockchain world.
Thank you. Thanks for having me.
Yeah, great that you could join. Thanks for everyone who was listening in. Also, everyone who asked questions. Very much. Many thanks for you as well. It's really nice to get some feedback and questions along the way. We'd love to see you again next week, of course, when we will be there at 9:30 a.m. CET. Looking forward to talk to you then. For now, I wish you all a very nice weekend. Talk to you later.
Bye-bye.